Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to look at the ratios for commodity bull market. We'll look at a bunch of different ratios to see what's going on. We'll look at some other straight up pricing just to see what that's doing, like lumber and nickel and aluminum, it priced in dollars, just to see what that's doing as well. But yeah, we'll jump in here and I'll give you my opinion on what we've got for the ratios. So let's dive in here. I've got the CRB to the S&P 500, and this is still moving on higher. Now, sometimes, I mean, this looks good, guys. This looks really good. And, sometimes we get pullbacks. This has gone up quite dramatically from this breakout here from a very low number, and it's moved up quite dramatically. On the big long-term picture view, though, we still have a long runway to go ahead of us for this commodity bull market, given the market conditions. I think we are really early, and the market conditions support the commodity to S&P 500 to continue moving higher. So I think that commodities will outperform stocks for the foreseeable future that we can monitor and measure and see. I think that this could probably even outperform all the way till the late 2020s, maybe even early 2030s. The demographic does support it. So that's what we've got there. The platinum to gold ratio is firming up for platinum. It looks a little bit better for platinum. Diving on in, this thing's been very volatile. We've broken the downtrend here, and it's been basically moving on higher. So platinum is outperforming gold, and platinum is at a very low level, which means platinum's cheap. Looking at the platinum to palladium ratio, platinum looks very cheap based off the ratio number, and it's outperforming palladium. So platinum is starting to outperform palladium. Platinum is the preferred metal here based off those two ratios. Now, the third ratio, platinum to silver ratio, it broke to the upside, and we're doing a retest move. This actually looks really good for platinum. If we get a little bit more follow through, I would say that platinum is telling us that inflation is still persistent, that it's there, and that the people are starting to finally come around, because platinum is a higher inflation sensitive metal than silver, then gold, and then palladium. Platinum's the inflation one. And if platinum's going to outperform every single metal, it means inflation is here. And people are believing in that inflation. So that is what we're seeing in these charts. And if platinum takes out, busts out of this falling wedge, well, we've got platinum in a full outperformance against all the other metals. Gold is outperforming silver. So gold is a larger inflation hedge than silver, as weird as that is. As weird as that is. In Weimar, Germany, gold went up more than silver did in that hyperinflation. But right now, we've got gold basically outperforming. This could be a false breakout, and then we could roll lower here with the ratio, and we'll see if that happens. Usually, in a bull market of commodities, silver does outperform gold. Usually. So this could be a false breakout. We'll see what happens. And right now, that's what we're seeing. We've got palladium to silver ratio. I think that this will fall, meaning that silver will outperform palladium. Palladium does not do well. Like this is the 2001 time frame. It turned and went lower. So this is also another indicator of the overall market and where we are in the markets. The turning point was 2020. It fell in relationship to silver, and I think this will eventually roll lower, meaning that we're going into a bull market of commodities. I think that's coming right in front of us. So I think silver will outperform palladium. Dow Jones to gold ratio, with the latest pop higher, we might go higher in the Dow Jones to gold ratio, which means we could see this move on higher for a little bit. It's just a pop. But I do think that this ratio will go lower, meaning that gold will outperform the Dow Jones Industrial Average over the rest of this commodity bull market. We're getting these tops, and notice the patterns, guys. I think this is going to come lower. That's what I think. I think this is all manipulation from March 2020. I think this is all manipulation here, this whole thing. It's a bunch of money and liquidity they put in the system. They bought stocks, they bought assets. This is a event that they were holding. They were trying to hold this level, and they didn't want it to fall all the way back down. But it will. It has to. The overall market will force this, and it'll try to at least. And we'll see how strong they are. Gold to oil ratio continues to go lower. We're at 16, a 1 to 16 ratio. This will compress lower. I still think this is going below 10. We're at just above the average ratio of 15. So looking at the big picture view, we went into this ludicrous area where oil went negative. The ratio went to extreme levels, and this is the best buying opportunity that I have ever seen. But this is going to compress lower. It's going to compress all the way down because we have a problem in oil. We have an energy crisis. Looking at copper to gold ratio, we're just moving sideways here. Looks like we're bouncing back higher. I know some people were worried about this ratio falling down, but it looks like here that copper had a nice good pop higher, and that we're going to come back within the area here. I think we have to have copper outperform gold, given the market balances in the future and what people want to do with copper. Copper is going to outperform. We want to use it in absolutely everything. And here we are breaking up back above its breakout. We're back within the channel. Uranium recently getting a little bit, we're still looking good on uranium from a long-term big picture view. This is going to go higher. I think uranium will be one of the best investments during this commodity bull market. We have an energy crisis. This is the only baseload power that's emissionless that we have. And it's a high energy return on energy investment. I mean, this is it. Uranium is it. I think we're going to have to go nuclear. There's the uranium to S&P 500. We're doing right on top of the support level. We've got uranium to gold ratio. Again, we've got large up days, small down days. That's exactly what we're going to see for a ratio to go upward. Looks really good. Uranium to crude oil. Now, I don't know what this is going to do. We could see crude take off first and then uranium go ballistic. So we could see something that does something similar to this, and then we see a bottom and it just goes ballistic. I think that's probably what we're going to do. We might see it come down a little bit, and then uranium goes ballistic. There's uranium to copper. Still looks good for uranium to outperform copper. That's why there's small little down days all through here. Looking at the Baltic Dry Index to gold, look at that. We're starting to break up with the Baltic Dry Index in relationship to gold above this long-term resistance line. This could be the beginning of the outperformance of the Baltic Dry Index in relationship to gold. And it might take some time. We might have to come up to the 5 level and bounce off and consolidate for a while, but this looks really good for the Baltic Dry Index. Looks absolutely excellent. Looking at lithium, lithium's just gone straight vertical. This is what Goose said. We're going vertical, and we're starting to peter out at the top here. We'll see what happens. I don't think lithium prices can go down. I think we're going to have to develop the mines that are out there. We're going to have a continued tightness in lithium. You can see all the rare earths and lithium going crazy. And I do have some lithium companies, highly speculative ones, but this is the lumber futures, LBS1. We had a long-term sideways movement. We've broken out of that sideways movement. Now we're consolidating in a gigantic pattern here. And then I think we'll break to the upside eventually. Why? Because we have a housing shortage. Massive housing shortage. Massive housing shortage. Looking at nickel, they basically broke this market and we're pulling on back some. There's the pullback. I do think this is going to remain elevated. We need to go into the Valley of Despair next, where we go into this. Basically, the pattern is you get this huge run up. It comes on down. You get another pop higher. And then we go into the Valley of Despair. You get this little double hump. You get a little bit of this and that thing, and then we break higher again. This is the thing that I am talking about. And then we're going to get a little humps, and then we'll go at it again because we're short. Palladium pulling on back again. This is not my favorite metal to be playing in inflationary time frame. Platinum is. Platinum's a cheap metal. I'd buy platinum over palladium every single day. Cocoa futures getting support right where it's at. Big long-term, big picture view. Yeah, we're squeezing up here. I mean, that's basically what we're doing. And then we'll probably break eventually in the future. We've got wheat futures that have been absolutely on fire. Look at that. Boom, boom, boom. They're continuing to make its way higher. So that looks excellent to be playing commodities. We've got soybeans also being very resilient. It's way up there. The daily candlesticks looks like it's bouncing off support, heading higher. We've got corn futures that are resilient at basically all-time highs. And we are right there at all-time high land, consolidating. Copper had a pretty strong move last trading session. We'll see if this bounces back. It's doing a retest move. But everything looks good with copper as well. There's your retest move to support. We're still above it. Nothing is broken yet. Notice that you've got 3 humps. That is a pretty common thing here, the 3 hump deal. Then you break. If you notice and you look at uranium, we have this 3 hump, if you want to know. If you want to know how I'm playing that, join the Platinum membership on the Finding Value website, and I can show you all the companies. But just to show you at URNM, just because, remember that 3 hump. And notice that the bottom, the last hump, we get this large hammer candlestick. Let me show you what I mean by the 3 humps. What do you see? Hump 1, hump 2, hump 3. Interesting, right? Interesting. And if you guys are interested in figuring out how I'm playing this, join the Finding Value website and Platinum membership. Get on the question and answer sessions. Get in there. Ask questions. Learn as much as you possibly can about all of this. Why? Because we've got the biggest opportunity coming right in front of us. PPI, does that look like it's slowing down? This is your producer price index for all commodities. That looks like it's going vertical, guys. Latest data point is April. This is going higher. The producer price index around the world are all going vertical. I believe Germany's producer price index looks ridiculous. Inflation will persist as long as this goes up. It'll transfer into the consumer price index. And they're lying about most of these numbers, guys. They are lying. The inflation rate, 8.3, they're trying to hold this thing down. They're lying about the inflation rate. We have broken up above this level. We are way up here. We are way up there. Well, how do I know that? Look at the rent and home index, which is 30, it's like 30% of the inflation, the CPI number, consumer price inflation. They said it was up 5%. They are so lying. There's no way that that's at 5%. I am sorry. There is no possible way. So this is easily up probably 18, 20%. Because that number there is probably 14 to 20%. And if that's the majority of it, and it actually brought this down, that means that the majority of the other stuff is probably around 10, 12%, which means if they accurately marked it right, we're probably in the 18% range, 16 to 18% range. They're just lying, guys. They're lying to everybody. We've got the housing market. 1.793 million is what we've got. I want to see what the next print is. That's going to be coming out soon. But again, we still have housing starts moving higher. All these housing busts, guys, I just don't see it yet. It's going to take time for this to turn down and turn around. It takes time. It's not instant. It takes, maybe they can do it in 6 months, but usually you get a rounding type, top. From this point here, moving up, we could round out and come back down. It's possible. It's just going to take some time. So that's what I've got there. I'll go down and look at aluminum. Aluminum is getting a pullback here. We have broken out of its pattern. It usually breaks out. We do a retest move, and then we head higher. There's it coming on back. Let's go to the weeklies. It's coming on back here. We're going to find some support in this general vicinity. Lots of opportunities to be investing in all these different commodities. And then the Baltic Dry Index moving higher. Look at that thing roll, guys. It's like we knew the seasonality was coming, so you got to get in there and hold on. Maybe some of these companies, they could be laggards, some of the companies. Some of the other companies are leaders. The bigger ones are leaders. The smaller ones are going to be laggards. And then the smaller ones, I think, are just going to go ballistic. At some point, they will go ballistic. The money will flow in. We just got to be patient. And if you notice, another thing, remember that pattern I always talk about, right? You get this sideways movement, it comes up, you get that pullback. This is the end of the pullback. You get a lead in, and then we go. That's your lead in right there. I see that pattern all the time. So that looks good, and we're probably going to go a lot higher in the Baltic Dry Index. That's my guess. So that's what I've got for today, guys. Everything looks good for the commodity bull market to continue. We will have pullbacks in the middle of this thing. Nothing goes straight up, and we are early. So I know a lot of other people think we're late stage. If we're late stage, then these are just going to go all berserk. They're going to go berserk to the upside if we're late stage. If we're early stage and we're still pulling back in the overall markets, then they might be delayed. So if they're delayed, we're early stage. If they just go ballistic right now, we're late stage in the commodity bull market. I think we're early based off of the expansionary phase of real estate, based off the demographics, based off all that stuff. I think we're still early. So that's what I'm basing it off of. If you guys like this type of analysis, give me a thumbs up, subscribe to the channel, subscribe to the website, Platinum membership. You've got this opportunity that's right in front of us. I know everyone's scared because it sold off. Everything's still intact. All of the things that I measure in this presentation are still intact for a commodity bull market to happen. So that's what I've got, guys. We'll catch you next time. Definitely subscribe to the channel. And yeah, we'll see you later.